The old saying, sell in May and go away, did ring true on Wall Street today. Stocks fell sharply on more evidence of a slowdown in the economic recovery. The Dow tumbled 138 points, the Nasdaq fell 29, and the S&P 500 was down 14. The big driver for today's sell-off, disappointing data on jobs. Specifically, the payroll firm ADP reported that 119,000 private sector jobs were added to the economy in April, and that was far fewer than the 160,000 or so that economists had expected. And March's numbers were revised downward as well, and that is causing some concern about Friday's big government report on payrolls and jobs. The Institute for Supply Management's read on U.S. manufacturing in April showed some modest growth, but it dropped to the slowest rate of growth so far this year. And construction spending during March fell nearly 2%, largely because of a pullback in government spending on new projects.
Meanwhile, the Federal Reserve knows that the U.S. economy still needs help. And so policymakers announced today they're leaving interest rates unchanged near 0%. Wrapping up a two-day meeting, the Fed also said it'll continue its massive bond buying program to encourage more lending and spending. The central bank also said it's ready to, quote, increase or reduce the pace of those purchases. Hampton Pearson has more.
At the Federal Reserve, monetary policymakers wrapped up a two-day meeting, renewing their pledge to keep interest rates at record lows and buying billions in treasuries to encourage borrowing and investment. The Fed even opened the door to increasing bond purchases if the economy does not improve.
I think right now they're over easy. I'd like to see a little bit of sunny side up here.
The statement from Chairman Ben Bernanke and his fellow monetary policymakers sees an economy that is expanding at a moderate pace with an unemployment rate that remains elevated, and the Fed says fiscal policy is restraining growth. Leading economists say the Fed benchmark of a 6.5% unemployment rate for raising interest rates is becoming more elusive because of government austerity.
It's weak, and it's weak because of the sequester. We're now starting to see fiscal drag from both taxes and the sequester intermingle, and that's one of the reasons why you see the Fed still out there.
Today's disappointing data on private sector jobs and a possible manufacturing slowdown, adding to concerns ahead of Friday's government employment report that April could be a second straight month with a significant slowdown in job growth. For Nightly Business Report, I'm Hampton Pearson in Washington.